Thank you for watching and tuning. My name is Angel. I'm the real estate property agent in Malaysia. I'm going to start my one staying in Malaysia for 13 years. I've been serving my clients from across 20 different countries for their MNPOT visa and their property investment in Malaysia. And a lot of time, my client has been asking me about foreigners' property taxation, how to file it, what do they need to do to prepare for their tax filing, especially before when they consider Malaysia as this country they want to invest in, or they already in Malaysia. They would ask me, Angel, what is the best way to purchase property? Should I use my own personal name? Should I to set up a company or use my existing company to sign my sales and purchase agreement, S&P? All right, so this is my honor to invite our guest speaker tonight, Mr. Amy Kong. Mr. Kong, he is a very reputable accountant in Malaysia. He is a advisory director of the very famous accounting firm is called YYC Group. Okay, and himself is also a certified member of Malaysia Institute of Accountants (MIA) and Chartered Tax Institute of Malaysia (CTIM), as well as a certified trainer of Human Resource Development Corporation. Participated in interviews on the radio, and AiFM, AiFM, or the newspaper, China Press, and other media outlets. All right. So this is my honor to have invite Mr. Amy Kong to join us tonight to talk about the foreigner property taxation. Right, I'll be sharing the host right to Mr. Amy. Okay, thank you so much, Mr. Amy, for joining us tonight.
Okay, yeah, thanks, Angeline, for inviting me to give a talk about what are the related tax will be happen to foreigner if you are buying a property in Malaysia. Okay, so let's give a quick introduction about me and my company. Okay, my name is Kong from YYC, and thanks to the introduction from Angel. And YYC is a 50 years accounting firm. We are established since 1974. Okay, and our vision is to be the #1 world-class accounting and advisory firm in Asia. Okay, and our purpose of company is to inspire everyone to overcome their odds, unleash their potential, and find fulfillment in life. So that is our purpose, and therefore we give talk to many participants. And these are the 4 job scope, our pillars for services that we provide to our participants and or to our clients. So we have our advisory role, we have account, audit, and taxation role and in our company. So throughout Malaysia and Singapore, total we have 9 branches in both countries. And in nutshell, we are a 50 years accounting firm, 2 countries. Now we have more than 800 packs of human resource people, HR, okay, in our company. And our client, we have more than 20,000 clients, and our trained participants are more than 375,000 people. Okay, so just now Angeline already introduced something about myself. Okay, and actually I'm giving talk more in this equity talk. So interested, those people who interested can check with me to know more. Okay, so what is our brand promise is that we like to have our expertise to proactive care and to give the best positive experience to all our participants and our clients. Okay, so today is our topic is talking about foreign owned property, the taxation that you must know in Malaysia. Okay, so without further ado, today our topic, we are going to talk about 4 main topics. And what are the conditions in Malaysia for foreigner? What are the restrictions for a foreigner to purchase a property in Malaysia? Okay, and what are the tax rate? Yeah, after you buy your property, then the next step is you need to sell it. Am I right? Okay, you're not going to hold it for a lifetime. So if you're going to sell it, what are the tax rate? And what are the tax what are tax involved if you rent out the property? And what are the tax you sell the property? These are the what we so-called a real property gain tax in Malaysia. And what are the SOP, or what are the form that you need to submit to income tax once you sold your property? Okay, so the first thing that we need to talk about is what if you want to buy the property in what we so-called a private limited company, or we call it a Sendirian Berhad in Malaysia. So will the tax rate be different from you're buying it under individual's name? Of course, there are different tax rate for corporate, and also different tax rate for individuals, and especially for foreigners. So later I'm going to do some a comparison and about the restriction to buy properties for foreigners in Malaysia. I'm gonna tell you about the income tax rate and RBGT tax rate. Okay, so for foreigner to buy properties in Malaysia, actually there are certain things that you must fulfill. Foreigner can only buy properties with minimum 1 million ringgit in value. Okay, and you cannot buy property more than 20 million. So that is for individuals foreign. And of course, in different state, there are different conditions and different restrictions. And as a foreigner, you are prohibited to buy Malay Reserve property, Bumiputra property, and also you need to get approval from government if you want to buy an agricultural land. Okay, so and for agricultural land, the minimum investment you must invest is you must not invest lesser than 1 million, okay, ringgit Malaysia's, okay, and also with a minimum acquisition, you need to buy more than 5 acres of land. Okay, that is some condition or the prohibitions or restrictions that as an individual foreigner what you can and cannot do. Okay, so you can by inviting a Malaysian to become your shareholders to form a private limited company, and the Malaysians have to be holding more than 50% shares, then only it considered as a Malaysian owned company. Then just now all the 3 restrictions are not restricted to you, so you can do that. Of course, there are many ways, but certain things that we cannot announce it publicly. Those people who interested, you're welcome to do a one-to-one with me or to talk to Angel, and maybe we can do it in a more private sections to talk about certain tricks and conditions that you can do. Okay, and next is I'd like to do a comparison between the corporate and personal income tax rate. And for you to, after you buy a property, you're going to rent out the property, for example. Once you rent out, you sign a tenancy agreements. So a corporate tax rate, okay, because if you are investment holding company, the corporate tax rate is automatically will be 24%, which is the highest tax rate for so-called a private limited company in Malaysia. And if you buy the property in a foreign individual's name, then your tax rate is the highest tax bracket, which is 30%. Okay, so in terms of tax rate, yes, it is cheaper to invest the property under a corporate or what we so-called a private limited company or a Sendirian Berhad in Malaysia. But because today I cannot give you some comparison between a corporate and an individual, because there are a lot of terms and conditions involved. For example, if you want to invest a property under a corporate or a Sendirian Berhad, you need to fulfill many requirements. For example, are you the person who taking care of the repair and maintenance? Then you can deduct the repair and maintenance as your expenses. And then if you are a company that you do all the so-called the repair and maintenance, then you can enjoy certain conditions because you are doing business. Then you can enjoy a lot of deductions under Sendirian Berhad. But if you are not doing that, then maybe what you can only allow is certain repair and maintenance as a company expenses. So therefore, today because of the time constraint, I cannot show you an example between a corporate tax rate or a foreign individual tax rate that rent out a property. So you may need to get my contact or from Angeline, then we can do a more private private talk or private discussion about what is the tax rate involved. Okay, so that is for the tax rate between foreigner individuals and corporate. Okay, then we would like to spend more time to discuss about real property gain tax. Okay, meaning if you want to sell if you buy a property in year 2020 and you sell it in different year, for example, you sell it in year 2024, which is within the 5 years, then the tax rate is different. So you need to know when is the year of acquisition and when is the year of disposal. If disposal meaning you sell the property or you transfer the property to a relative. So doesn't mean that you want to sell at a profit, then only we so-called you were involved in an RPGT. If you dispose, then the income tax, they will look into what is the market rate that you are disposing your property. Then if you are having a gain, then you need to pay for RPGT. And if you are making a losses, then maybe you are no need to submit no need to pay for the RPGT, but you still need to submit for your income tax form, so-called a CKHT form, CKHT form 3, which is stand for Cukai Hasil Tanah. Okay, what we so-called in Malay, that is in Malay, and which is mean for the real property gain tax. Okay, so what is the comparison, the tax rate differences between Malaysia citizen? This is Malaysia citizen, and this is a company, and this is foreign individuals. Okay, so for year 1 to year 3, the year of disposal, meaning if you buy a property, just now the example that I've been giving, if you buy a property in year 2020, if you sell it in year 2022, there's all within 3 years, am I right? So the tax rate will all be the same of 30%. Okay. So if you sell the property in year 2023, which is year 4, then there will be a tax rate differential between Malaysian citizen, which is 20%. And if you are under a company, also 20%. But if you are selling it under a foreigner, okay, you'll be still taxed at a 30%, okay, for the gain, for the market price comparing to the cost of acquisitions. And from the 5th years, there is also a tax differential for a company, 15%. Okay, a company and a Malaysian citizen are the same, 15%. But for a foreigner individuals, the tax rate is still 30%. So it might be encouraging, or it might be advisable for you to form a Sendirian Berhad or a private limited company if you plan to sell the company within 5 years. Then you can enjoy the RPGT tax rate. But it involves a lot of different condition and calculation. So you might need to look into the case by case differently. Okay, so from the year 6 onwards, for a Malaysian citizen, there is 0 tax rate for RPGT. Okay, there's some benefit for Malaysian citizens. And for the company and a foreigner, the tax rate are 10% for the RPGT. Okay, so as what I mentioned, it's advisable to incorporate a company to invest in property. But also, that's why I mentioned there's also involved different tax computation and also tax deductions. So you might need to look into case by case differently. Okay, that's the comparison between the tax rate for RPGT. So let's look at the example. For example, okay, this one is Sendirian Berhad or a company scenarios, and this one is a foreigner individual scenarios. Let's say, for example, we sell a property, okay, within 5 years, on the 5th years, we sell the property for 12.5 million. Okay, 12.5 million we are not using the selling price to deduct our cost straightly, but we need to have calculate if we have some renovation. Okay, for example, a renovation of 2 million. If we have extensions, for example, we renovate and we extend the property, so with a cost of 2,900,000, and also it involves some legal fee for the disposal of property. It involves some commissions, agency fees of 220,000. So therefore, our disposal price is actually 9.315 million. Okay, which is not using the 12.5 million to calculate the selling price. Then as a disposal price, if that's the case, then you'll be paying a lot of RBGT. Okay, so we need to deduct that with our purchase cost. For example, like the acquisition cost in the first year. Meaning, for example, like just now I'm giving an example. If I buy the property in year 2020, okay, which is 8 million in cost, so we sell it in year 2024, which is fifth year. Okay, so you need to know the year of disposal and the year you acquire the property. Okay, then of course there are some purchase costs. We need to add up some costs. If you have, for sure, if you are buying a property, you need to pay for the stamp duty, and also you need to pay for the legal fee. So these costs are also can calculate into your acquisition price. So you look at the terms, which is we are using our disposal price to deduct our acquisition price. Okay, which is after adding the acquisition price, which is our purchase cost. Okay, adding our stamp duty and legal fee. So total is 8.284 million. So after the deduction, we notice what are the gain is 1,031,000, and therefore the tax rate of company and a foreigner do make a huge differences. Okay, which is 15% comparing to 30%. So the tax rate is 15% differences, and therefore the tax for the company for the RPGT is 154,650 ringgit. Okay, 154,650 ringgit, and the RPGT tax for the foreigner individual is 309,300 ringgit. Okay, so therefore the differences just is the differences of 15%, which is 154,650 ringgit. So which is a huge gap differences. Okay, comparing a tax rate for individuals and a company. Of course, you need to do your tax planning earlier. So do bear in mind, you need to have a begin with the end in mind kind of concept. Okay, if you're not going to hold the property for long, but do need to hold it for the fourth year and fifth years to enjoy the tax rate. Okay, so what are the steps involved if you want to sell the property, and do you need to report it into the income tax? Of course, yes. So these are the document that step one. Document that you need to prepare, which is a stamp SMP, sales and purchase agreement, and you need to submit your MOT, which is the memorandum of transfer. We call it Form 14A under the National Land Code. Okay, yeah, you need to have a copy of your title, and also receipt and invoices for all the expenses. So just now, what the renovation cost, the stamp duty, the extension cost, and also the legal fee involved, you need to provide the receipt. You need to provide the invoices for all the costs involved. No matter it's 5 years, 10 years, or 20 years, if you want to claim for those expenses, you need to keep those receipts and invoices. Okay, then of course you need to do a tax computation for the RPGT. You need to submit it together with the form CKHT. So these are the step one. You prepare it. Then if you, okay, there are three things that you need to involve. One is that when you acquire the property, you need to file in CKHT form 2A within 60 days of acquiring the property. Okay, And if you are selling the property or you're disposing the property, do you remember what I've been saying? Selling doesn't mean that you need to sell at a price. Even if you are transferring the property to your loved one, transferring it to your brother and sister, that one is also so-called disposal. So income tax will need to get a market price and then to deduct it from your acquisition cost to see whether you're having a gain or not. Okay, so if you are disposing your property, you need to file in a CKHT 1A if you have a gain. So if you don't have a gain, okay, if there is no gain, then you need to file in the CKHT form number 3. Okay, and if you don't submit your form, there might be a penalty up to 25% of your RBGT, the tax that you need to pay. So it may be a huge amount that you need to pay. Okay, that is step 2. And step number 3, if you want to do it submission online, you can do it at the eCKHT platform, which is also under the Inland Revenue Board. You can go to the website and look for the eCKHT platform. Okay, and also if you are a foreigner, you can't do it and you don't know how to do it. Of course, normally I will recommend you to pass it to your tax agent or to your lawyer. They will help you to do that. And also you can do it under manually, or we so-called manual submissions. So that's so far is conclude what I've been sharing today. So about buying a property and disposing a property, what will be the tax and tax rate involved? Okay, for a foreigner to buy a property, it can be either way from forming up a company, but you need to make it a Malaysian's majority owned company. And how will it comparing to individuals, foreigners to disposal or buying a property in Malaysia? So with that, I conclude my presentation. If you have any Q&A, do ask, because today is the recording sections, do ask me via YouTube or some other platforms, and you can also consult it through Angel. Okay, yeah, thank you. That's all for my sharing. Thank you very much.
Wow, thank you so much for Mr. Kong for your very concise and precise introduction, and then to conclude all the main points. Yeah. Okay.
Okay.
So I just have a question, because I will ask question for people who would view. As I noticed, right, we talk about people. I think people who really want to do things right, so they will pay attention to taxation, especially for business owners. Yeah.
Okay.
So as we are all quite aware of that. For if you purchase a property registered on the company name, foreign company name, right? Okay, then that taxation is a fixed flat rate, is 24%, right?
Yep.
Okay, and then for foreigners, if we purchase the properties under our own individual name, and that is 13%. But my question is, what is I understand the 30% is for non-tax residents, which is for people who are not, the foreigners who are not residing in Malaysia for 183 days.
Yes.
That is the definition. Would you please elaborate more of this, the foreigner as a tax resident and non-tax resident, and what is the difference on the taxation?
Okay. So thanks for Angeline for asking more questions. That's very good questions. Because just now I illustrate the tax rate, 24% for corporate tax rate and 30% for foreigner. That one is a simply illustration purpose. So how to consider yourself, either you are a foreigner or a Malaysia tax residents, which is you need to stay in Malaysia more than 183 days. That is one of the condition, more than 183 days in Malaysia, then you are a Malaysia tax resident. Then you can enjoy the scale rate from 0%, 3%, 10%, 15%, all the way up to congratulate if you're need to pay 30% tax rate. That means you are earning more than a million income a year. So that will be the simple guideline for you to classify whether you are a tax resident of Malaysian tax residents or non-tax residents, which is the 183 rule. Okay. make it simple. I just share about this. Of course, there are other things, but I don't want to complicate the matters. I will just share about 183 rule first. Okay, thank you.
All right, thank you so much, Amy, for us pinpoint that main principle, because some people will be scared. Wait, wow, 30% of the taxation.
Yes.
Well, in Malaysia, then where is my money? Right? But don't worry, if you think Malaysia worth it, I think that taxation rate is actually quite standardized because they actually want to make sure the property is more for people own to stay, less for speculation.
Yeah.
Right then. Thank you so much, Mr. Angie, for your section
Okay.
today. I appreciate for your time and effort today. And hopefully next round we can invite for another different topics.
Yep. Okay. Thank you.
Thank you so much. Good night. Take care.
Bye. Good night.
Bye.